Mess with fire, now it's closing in. Right, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So in the last 12 hours since our last update, we did get a little bit of a move to the sub 30k region and get bought back right back above whence we came to the daily open, most likely. And let's go into the liquidity and see how it changed since last we updated you at the Asian session, shall we? So we got this break to the downside, and if you had followed the idea of just coming down and breaking that region and paid yourself in profits, you would be chilling like a villain and wondering what to do from this point. So they came down, took out some $78 million pools here. Actually, did they take this character out? Let's take a look. I think it's just 100x people here. Oh, by the way, what is high block capital? Well, it's people lock their liquidity in the charts to get burned to a crisp by the market maker, and we get to see where those crispy characters lie in wait. So that's what we're doing right now. So follow me along into the 1 minute chart. So they had this $36 million 100x long pool that they came down and gobbled up and pinged in some $82 million off of that sub 30k region, at the same time pinging in some shorts in the tune of $119 million pools spread out amongst these 150 and 25x regions. And they came back to the 100x region without hesitation and gobbled it up due to it being more shorts to longs at that point.
Fatality.
And that's what happens when there's an imbalance to one side or the other. And then they came back for the other partners in crime up here during the New York session, and now we are sitting at the halfway point, considering whether to come up to that 30,529 region to take out this entire region that we pointed out as a possibility from Saturday. And are we going to continue to that region now that we pinged in an imbalance up in that region to the tune, if you off balance this, of $40 million by comparison to the longs pinged in at the same level. Alright, so let's go to the higher time frame liquidity pools and the external liquidity, whatever you want to call it, on heat map, and go to the 7-day. As it stands currently on the 7-day time frame, we do have that imbalance to the downside, which has yet to be reclaimed. If we come up into these regions and take out some of those 50x pools we outlined on the 1 minute in the internal liquidity range, and then have to pay less leverage amount and then sharply reverse. This is why we go down to go up and go up to go down. They go up to stop the high leverage and then drop to the direction the high leverage traders can't bear the amount entry wrong that they're wrong at. So they go up to go down. So if they were going to go up to stop out those 50xers, and if they were intending to drop it, they would drop it down in similar fashion how they dropped it today to bring it up. So the imbalance on the 7-day is to the downside. Whether they're going to go there or not is up to them. They do leave pools on the table, as we've seen in the past with here. They came back, left the 18 billion to percolate at 31.7, only to come back to it later when it was 24 billion, and then came to get this guy at 15 billion as well. So as it stands right now, we're just a hop, skip, and a jump from reclaiming that wick. We got double digits down to 29.8, near double digits at 29.7, double digits at 29.6, near double digits at 29.5, and 16, 17, 19, 17, all the way down to 29.1. I think we outlined it's about $80 billion in that range down to 29k, as opposed to in the monthly time frame just above us, not so much. So unless we gap all the way up to claim the external liquidity range on the 2-year time frame of that $500 billion, we could easily see ourselves coming down to this region, and they're just trying to ping in as many longs and stop out as many shorts as they can. It's a win-win thing to go up right here to take out the shorts and ping in the longs and give the impression of a double bottom before they come into this region to reclaim this wick. That's the narrative I'm seeing on the liquidity as we expand our vision to the 3-month liquidity pool. As we see ourselves to the upside here, we do see these pools of shorts getting thicker on the 3-month time frame to that 32 and above region. When do they make the repricing algorithmic change to this region of the 33.3 and above? That is the question. There is the I'm suspecting these regions at the sub 25k are market maker positions. They're getting yellow hot in the 24.6, 24.4, and 24.2. That's the largest pool of liquidity down there. If the Bart Simpson that people talk about is going to come true, we've been saying it for I don't know, 10 days since it was back here. In the 6-month time frame, there is 142 billion at 24.6, 173 billion at 24.3, and near 100 billion at 24 even. The larger liquidity pool is to the downside on the 6-month time frame. It is getting hot up in the 33.6 and 33.3. There is 100 billion pools there as well. We need to be aware as people claim that there is bullish news inbound. Generally, that is to induce a certain mindset to keep yourself, the retail trader, bullish. Just remember when El Salvador talked about adopting Bitcoin as a currency, that was right around here in September 6th of 2021, and then there was bearish divergence on the daily, and then that's when we dropped a massive amount in 10 minutes, I believe. I remember catching that bearish divergence short on the right shoulder of that. So I mean, news to me is superfluous and sometimes can be misleading. So the whole BlackRock ETF and the XRP case being over could be a way to get retail to FOMO at this premium level while they take it lower and trap them as a cushion to get their entry down below once again. So that is just something to think about. On the 2-year time frame, we do have that 175 billion at 32.4, 157 billion at 32.8, and 192 billion at 33.2. So if we come down to the 29.2 region, take out $86 billion on the 2-year time frame, as well as the 42 billion at 28.8, we could spawn some divergence to go grab those guys. And at that point, what do? Do we start to chill out and meander back down into these pools until the halving time? I have no idea. But the liquidity pools are strongest up to the 33.2 region, and then even at 33.6 you have 124 billion and 100 billion at 34 even, and it sharply gets by half to 66 billion at 34.4. So the external liquidity range, do we get repriced up into these regions? It is likely we go and grab some of this before we reverse if we can sweep the lows to justify the sustainable move to that repricing model. So we go back to the monthly and eyeball these pools once again. Are we going to head down to that region? Let's go take a look at our Binance chart. So since the morning time was had, we basically went live around here, was it? So we went around the daily open and basically talked about coming down to this region. So if you take and trim as you go, this still holds true for me. There's not really much that changed within the 12-hour period. We essentially went sideways. So let's turn on our oscillators and see what's going on. Boom, boom. And link in the description if you want to know what this oscillator is. Bada bing, bada boom. You go down to features, toggle this toggle switch of the suite that is from Bitcoin's bottom at 15k before we knew it was the bottom, because it's the pattern we look for over and over again, and this rocket ship that took us to the upside on the chart, you can see what those components are. What is the rocket ship? You can read about the stochastic array, a never before seen formula which monitors 7 time frames of information over 32 different indicator values. So as it sees, we have 5 time frames oversold here, but we are struggling. Normally when we have this struggle, it triggers like a stop loss hunt. There's times in the past where we were 5 time frames oversold, and if you're just patient, like if we go back here, for example, let's just go back. Okay. Let's just go back to here, all right? Similar price action, we dropped down, we struggled, we created a rounded top. Come on, is it not loading? What's going on? There we go. And you start to get these, like here too, we had like 5 time frames oversold, 6 time frames oversold. It triggered a stop loss hunt, and then we came back out. And so even if you were positionally swing trading, it's all about the type of trade and the type of leverage you have. But if you have these 5-6 time frames oversold, it generally means a swing trade is inbound. And if we went forward in time, that's where you had a rocket ship. And we posted this rocket ship to the group actually as record. Here we go. We had this message coming, whoops, down here on June 15th. And it was a nice little rocket ship to the upside, and boom. So getting the 6s with the rocket ship and the scooping of price action, this is really what you want to see with this Williams double bottom and the rising sun and the bullish divergence. Like, this is your ultimate entry idea, and this is why we call this on Momentum Master Ultimate the ultimate entry. So this ultimate entry formula is what sets you up for success for these massive plays to the upside. If you're just patient. Now if you want to play the scalping game, you could basically scalp these plays until, let's see. This is why I'm patient. I'm waiting for this wick recovery. These 5 time frames oversold did eventually give you a 4% move with some leverage, would have been really juicy. So they do play out in their own right, at least from their entry, to give you profit. So you could scalp them, but as it seems to me, there is this bearish trend, super trend holding. So I would like to see us come to this lower price range. Let's take this off really quick. This is for my NASDAQ scalping setup. And then we go to here. Let's make our descent through the time frames. Here we go. Daily. So the daily time frame, money flow flowing beneath the RSI, which insinuates a money flow injection at some point in the near future. The Williams is starting to come down here, causing this suppression of the daily takeoff here. Until it was suppression, we talked about it as potential suppression back here, saying that this could not take off when this gets high. You could get a double top scenario, but it's not your ideal. It is ambiguous, which caused the suppression to occur. So this is why when you have them in alignment like you did on June 15th like this, that's your ideal entry. That's your ultimate entry per the formula. And when you have the baselines beneath your price as well, that's also your smooth sailing setup. Okay, daily time frame. Williams could come down a little bit more for that daily candle close. Maybe you see some fireworks just into the daily candle, or I'm not sure. Let's go into the 22-hour. 22-hour time frame, money flow and RSI together. Williams could come a little bit lower. Stochastic RSI getting into a place of oversold status for a potential play on the 22-hour time frame. You are getting the over cross down events. However, there wasn't much momentum from that cross down, although you could have played it from that cross down lock in from here to there for 12% or so. Does it continue with this suppression from the cross down event in further fashion, we will see. Time will tell. 12-hour cross-down event is in play from back here on Saturday. Are we seeing this suppression going to continue down to this wick or not? The 12-hour time frame stochastic is getting suppressed. Williams trying to come down to a oversold region with that suppression. We could see some interesting things inbound through at the end of the week. 6-hour time frame, money flow getting to an extremely oversold region while the RSI holds above it. You're getting this double bottom idea on the 6-hour time frame. If you do see a 4-hour play cascade into a 6-hour event, this could be a W formation to the upside. We will reconsider if this support holds. Let's see how many times we've hit 30K. We've hit it like 1, 2, 3, 4, 5, 6, 7. This is like our 7th hit to 30K. Are we going to hold 30K and W formation out of here, or are we going to ABC our way to the downside? The 6-hour cross down event is still in play. We flirted with the idea of a cross up a few times, once on Sunday and again on Monday, and now we're getting in 2 hours 27 minutes. Does this candle close beneath the baseline or not? If we start to go to the 4-hour time frame, we did get a cross up event, but it's not, it's at the region of immediately crossing back down, so it's getting that suppression of the 6, 12, 22 cross down suppression of takeoff, perhaps on the 4-hour time frame. So the 4-hour time frame also getting rejected here and possibly reset for a hard reset. The Williams is getting in a sweet spot here, which we like to see. The low Williams on all time frames would be ideal. And if we go to the money flow, and the RSI is also in equilibrium. So if we go to the 1-hour time frame, 1 hour is getting overbought without having gone anywhere. This is the opposite of bullish, when you see price action go like so and the stochastic RSI go up without having gone anywhere, essentially, from that point. So if we go from where we were, we basically got to a higher point in the stochastic RSI with actually getting lower from where we started here. This is kind of a struggle insinuation on the hourly time frame, which could be a hard reset for that move that we put out during the Asian session. If we look at the cloud here, we are getting rejected off of the adaptive moving average, and the cloud idea is starting to turn bearish again. So we did not reclaim it. This was our reclamation chance, which faded into this sub 30K idea. Let's go ahead and take a look at the lower time frames, although they start to get chaotic in this region. Williams starting to come down, perhaps on the 15-minute. You got a 15-minute reset with the Williams as well. Got a cross down event confirmed also. There's a lot of fake outs on these lower time frames as they do their thing, but they are generally good at giving you a little bit of love in a direction. This is why the baselines are a scalper's dream. They're your first sign of reversal across all the time frames. They give you that sauce to look out for on either time frame, especially when you get candles closing above it. You can start to see this slight upside or slight downside play ensue. Let's go see what everyone's up to. What's up, Ireland? Has long time no see. J to the D, what's up? Sephiroth, what's up? So getting this 15-minute reset of the stochastic RSI and the Williams possibly inbounding here. You had the overbought status, 2 time frames overbought signal being sent to your phone with the dynamic alert system if you were so inclined. Getting those 5 time frames oversold continually here, setting up for a weekly possible play to the upside at some stage. If you're patient, maybe it will present you with a very decent entry of divergence off of the reclamation of the wick, is what we are counting on. Are we going to get this at some stage in the near future? The liquidity on the monthly does suggest it, and on the 3-month and all of those time frames as well. The only thing is this 100 million at 30,529. Do they stop hunt these guys before coming lower? It's a false move Monday. So what are they going to do? The entire day has just been one big false move. The entire weekend. Could this be an inverse Bart Simpson to the upside too? You could have yourself an inverse that takes you right back up as well. The liquidity. The thing that we were seeing was that some of the shorts did not enter in such fervor. We went over it in the morning stream. The shorts did not enter in huge amounts. You have 156 million up at 31,171, and that thick band is also screaming reclaim me at some stage. But yeah, eventually some side is going to get paid in a decision to go up, and they leave those guys there while they do that decision, but then they eventually come back to them. So in this case, seeing like 241 million like this gives you the insinuation that it will come back immediately because it's too rich for them to pay out, so they come back to them. So I don't see any of these rich payout guys. I mean, 156 million is a lot of money, but by comparison to what you see in some of these shifts to the upside, you see 300 million, 200 million, and I don't really see these bubbles in that same manner, and they didn't really ping in anything over the weekend. So that's kind of why I think they're doing it for Monday. Monday is kind of taking the place of the low liquidity weekend, as people are more hesitant. So yeah, as it stands currently, if we just look at this alone, you see there's more shorts being pinged in than longs at the same regions that they drop out. So coming up to stop out some of these 50xers before they go lower is, we just haven't seen it. It's just been ultra weak in holding this bearish trend line. So if you're in the trade, you could basically set your stops at some level you feel comfortable, but I definitely don't short the bottom. So if you're looking to short, the short opportunity was up here that we put out for you on Friday off that 618 rejection. I'm going to go over how I did that. So I was looking at this here, and we did have a deep retrace to the 786 and then rejected off the 786, never to return. And we had another even if you just did the 618 and held with the stop loss above this region, that was your signal for entry. And then also if you had the trend-based fib extension level, you could have seen that this 236 level entry held true, and then we came down to the Hail Mary 2 region, and now figuring out what to do. So bearish trend-based fib off this math of this impulse retrace gave you the clue as well. So you do have liquidity up in these candles that are needing reclaiming, but this could just be the trash consolidation here could just be a B wave to continue lower. You call it a bear pennant. 19 minutes for this hourly 4-hour candle to close. Does this 4-hour candle close beneath the baselines and start to make this cross up negated to a cross down? Then you have the 6, 4, 12, 22 and daily in a cross down formation. The daily has been having you at hello with the suppression of baselines here. We have yet to reclaim the baselines, which are your first sign of reversal. So until you can start putting daily candle closes above this level, and realistically above this 236 at 30,724, then coming up to these regions at 36, 34 and 33k is moot point. So first things first, you got to reclaim these levels, and the time we had that was back last Thursday. So as I've said before, I might probably sound like a broken record. Until you can sweep the lows and knock out these longs, you can't really have a sustainable move. It's just a stop hunt to continue lower. Even the blue candle insinuated a stop hunt. This volume on the daily was just enough. The blue ones are considered stop hunting candles. So my tune hasn't changed really. It is False Move Monday, so you're going to get a lot of wick whacking, trying to trap and ping where the liquidity for the week and the interest for the week is lying. So they are creating double bottoms and double tops, and they're trying to figure out who's interested at what level and spiking back from these regions. So you're getting more shorts entering, 32 million here, and no longs. So it looks like they might sweep up to these regions now based off of how many more short interests are being generated here. So coming back into these regions to come back to the 50x at 30,624 based off of just what they're spawning in over the other. So coming back let's go see how it plays out on this lower time frame. We're going to stay until the 4-hour candle closes and see if the cross up remains in effect here. You are technically beneath the the weighted moving average, and you had this bearish candle close before in this indecision. So it's all about how it can hold or maintain, or it's going to continue to cross down and potentially dump out of this on the 4-hour candle close here. The last time we had that close gave us a nice dump-a-roo out of it. Doesn't always have to give you that big thing, but it can give you a little bit of something. Let's see if anyone has anything to point out or see. I think people were looking at XRP, so let's go to XRP and see where XRP is headed. Basically coming to that winning the case level, and you're getting the cross down event. The cloud just had extreme volume burst, unusual from where it was at, so it obviously looks thicker than Bitcoin. If we go to this and start to look at XRP, you can change this to XRP as well. If you want to see liquidity on altcoins, I'm happy to go over those as well. So if we look at XRP, there is a $1.6 billion imbalance to longs. So coming back and retracing into this long liquidity would be nice to see. If you look at some of these giant shorts that were opened here, let's see what that giant short is. You have a $59 million short. They retraced into both the 75x and the 50x shorts here, and then they came back for the longs here. So as it stands, there's still 59 million, 21 and 12 million up in this region at XRP liquidity heat map. Let's just leave that up and take a look on lower time frames. So these cross down events also have you at hello too. They basically have these cross downs, and then the suppression gives you the idea. And if we take this Fibonacci retracement tool, ideally retracing into the 706 or in this golden pocket region would be an ideal thing to witness as retail starts to FOMO into positions here, and they give the illusion of strength. They could actually be setting it up for the idea of weakness. The highest point was here. So if you break beneath this 236 level at the 72.53 region, 0.7253, then you could be coming down into these regions doubtful that it's bearish though. It would just likely come down to the 706 region and reposition into a long. Let's see what that level coincides with the liquidity at 68.7. So let's see, 68.7. So there's an entire like region just below 59.53 has the thickest band here, but right up here at 62.37 is a huge band of liquidity here that they could come into. Once again, you are imbalanced by 1.63 billion in longs, so there's 1.63 billion imbalance on XRP, but with the idea of the case being over and banks wanting to transact in it, people are possibly hodling it. Let's see, some people were looking at APE, so let's go ahead and look at APE for you. While we wait for the candle to close. So APE has been chewing into the liquidity here as a lot of longs have opened. There was previously a $34 million imbalance which they gobbled up, and now the shorts they're meandering between longs and shorts, but the imbalance is looking to rectify itself. There is some more down here that it could come back to at the 1.859 region to clear this zone completely, but you do have large, and by large I mean relatively to this asset, large short up position at 25x up in the $2.2 zone. Particularly there is a 100x pool, I believe, that they did not, they came back for that. They came back for that. They came back for the 50x, 50x over here, 50x over there, 100x here. So some shorts are opening that they could come back into. Do you have anything you would like me to look at before the candle closes for the 4 hour? We have 119 million up in that region now, so getting juicier up in that 30,529 region. Are they going to just bust down and take it? Let's go take a look at the dollar. Let's just see how the dollar's doing. Is the dollar going to give us an unexpected burst to the upside? We did see a massive drop down to this level. This is the 1618 Hail Mary region where it's starting to try to find a double bottom at. You have the 6 hour cross up event just as you have the 6 hour cross down on BTC. Starting to get the cross up on the 8 hour. Starting to reclaim the baselines on the 12, have yet to cross on that. 22 also starting to reclaim one of the baselines in a fashion. If we look at the daily time frame, the daily has closed out above the 1618 base bearish trend base fib extension level, which also happens to be a daily candle close. It's just above a daily candle close level. Dollar also is starting to get that double bottom in the Williams region of the daily time frame. Still, cross down is in effect. We have yet to reclaim any baseline, so this could scoop over in the next 3 days or so. So it could go sideways for 2 or 3 days. If we look at the 3-day, it's starting to get a vector candle volume in that last 3-day zone, even though volume is not displayed on the DXY. I don't know how they factor that without displaying it. cross down is well into effect. Could keep going lower on that 3-day. Starting to see the rockets and their somewhat glory that they're starting to play out here, trying to come back to the 1 from the 1618 or the 1382 rather. Hourly time frame overbought, and the 4-hour time frame starting to get overbought, but the Williams could get that suppression of the overbought status, staying overbought as it plays out, with the 6-hour legs to that play. Also, the angle in which this is rising is left to be desired. Could be a false rising sun here. RSI is in a oversold status. Let's go back to the total for total market cap for cryptocurrency. Cross down event on the 6-hour still in play. You're getting hidden bullish divergence on the money flow here. This is what triggers a stop loss hunt normally. So you get a stop loss hunt and then you get a surge up. So they could be dumping it out to get that position and trap the traders, use their liquidity to get their actual position and pack their bags off the stop loss hunt. If we go to the total 3, this bearish level that we're at, we are trying to bounce off the 786. We kind of reclaimed this range here, but starting to fall back into it for that handle of a cup and handle idea. How deep do we retrace into this? Well, you have an entire fib to look after on this vector candle here, that you could come back into that 618 region, try to find that, dump out a little bit more, test the support of this candle on the total 3. So you could bounce off of that region out. Total already reclaimed that 236 idea. If we hold this 236 here, then the idea of projecting more money into the market, coming up into these regions of this trend-based fib level, a bullish trend-based fib level, is in effect for total, which insinuates more for that idea for, rather than alts, for Bitcoin, because this is showing strength for Bitcoin for the total market cap, including Bitcoin. This does not include Bitcoin, so it's maybe the alts wanting to retrace some more, or, well, Bitcoin does its thing. This would be an extra few billion out of the market. Let's go look at something interesting. All right, 5 minutes. Do you have anything you want to look at? All good here? Good. All right, so we're going to take a look. Indecision 6 hour, in 2 hours for that to close. Still getting that suppression as of yet, showing no sign of reclamation yet. This was back in the daily candle close, showed some hope, and then they gave it back, and now they're showing some potential sign of weakness on the 6 hour. If we go to the 4 hour, same thing is occurring. Does this for 4 minutes for this to close trigger some algo sell-off or what? Essentially in 4 hours it's gone up and down and closed where it opened, so there's this indecision slash pinging of liquidity. It looks like we came back down too. We went all the way up to like 30,300 and then we just fizzled back out. Coming back for that 100x right now. So they're coming back into the 100x longs that they pinged in up here at the top, the breakout traders that buy as you break out, and then they sharply reverse into their liquidity. Generally, you want to buy low and sell high. The idea there being the breakout is not guaranteed. It's just a harpoon wick for those guys to get sucked in and then gobbled up. All right. So the cloud on the 4-hour also curving down in a manner here. You've been seeing a lot of weird shift fake outs on this consolidation range. If we look at the cloud on higher time frames, for example the 8-hour also closes in 2 minutes. 8-hour cloud got some volume and it's beneath the cloud as of this moment, and you're getting the cross down on the 8-hour as well, with the potential close in 2 minutes beneath the baselines here. You'd like to see a test of this super trend level, which has been holding since June 17th. We are still bullish before we are bearish, so please keep that in mind. I'm just looking to position into a juicy long up to this region. I just don't believe it to be real until we sweep the lows. There's a narrative behind things that also makes sense in terms of there's 50x traders all throughout here, 100x traders all throughout here that hope to get 100 times their margin up here, and who wants to pay that? So they sharply reverse and get people to dollar cost average and knock them out. It's a rodeo trying to kick off the liquidity. All right, one more minute and we'll see what goes down for the close. So you're in false move Monday. Tuesday and Wednesday should be the narrative for the week. It's kind of interesting that we've been holding this for 3 days without even going above 30,463. We've been seeing some resistance off the super trend level on the hourly time frame at this 30,400 region. Can't make it above 30,400. Is all of this offloading as we go lower? Is this a distribution model as we start to head down into that region and then people that are trapped up here are dollar cost averaging the idea of the hopium of going back to this region? Did they snag some really good players that they look to liquidate down in these regions, and they're trying to get them to dollar cost average their way to a higher liquidation point? The bigger players would like to put their positions down below here to position into a long, and the patient player wins. So yeah, I'm being patient for that long idea. I missed out here, but did I really miss out? Because I wouldn't have been able to get out of the trade at work unless I set it into profit. But as it stands right now, 4-hour candle close. Let's take a look. So the 4-hour candle close did close just barely. It didn't cause the cross down, and you had this indecision candle. So you're getting this interesting potential of a possible scooping of the baselines here on the 4-hour time frame. If you stay above this 30,169 level and start to go up from here, this is the possible idea of that scooping of a 4-hour time frame. The momentum though says that you're more likely to come down than not on the stochastic RSI. If we look at the leading MACD, it has crossed down as well. So seeing another 4 hour with this coming down as a suppression idea, with just based off the momentum of these KD lines still wanting to come down here, would be the thing to see on the 4 hour lead up to the daily candle close here for the false move Monday. So false move Monday has been the projection that we called to come out. It's just been a lot of wick whacking, but the direction has been accurate since 9 a.m. coming slowly to the downside. We so far have a rejection of that adaptive as well on the hourly close there. So the hourly has given back that KD line cross, and we're starting to see the MACD bounce off of its already crossed down state. So this MACD could come down with the Williams on the hourly time frame, seeing that full reset of the hourly, and yeah, coming down off of that overbought status and rejection of the adaptive here. This is called the trend adaptive moving average. You can look into it. It's an interesting back tested level here. So this kind of mean reversion thing that we've rejected off of insinuates with this cloud shift down on the hourly that we could be seeing ourselves come down into this region. So once again, I haven't changed my tune. I'm still on the path of seeing this come down further into this region. Let's just see where it goes at the daily candle close, and we'll keep you posted either way. Hopefully it was worth your time. That's my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff, and we'll catch you on the flip side. Peace.